from Manila. And good morning, good afternoon, and good evening to you, wherever you are joining us from. Welcome to the 35th session of ADB's Circular Economy webinar series. Our webinar series is a platform for showcasing technology solutions, new approaches, emerging issues, and case studies where we can see potential for application in Asia and the Pacific. The webinar series is led by ADB's Circular Economy Working Group, and you can learn more about what we do on our ADB Circular Economy data room. So I am Erin Sinogba. I am the Project and Knowledge Management Lead of ADB's Regional Technical Assistance Project on promoting action on plastic pollution from sources seen in Asia and the Pacific. Today, I am pulling double duty as moderator and co-presenter for today's session. Our session today will discuss an important question that comes up a lot in transitioning to a circular economy, and that is, how are we going to pay for everything? Our session on financing plastic circularity, recommendations to overcome market and policy challenges, will go into the financing needs to promote plastic circularity in Asia and the Pacific. We will explore the various factors hindering access, as well as recommendations and solutions for mobilizing and accelerating finance. I am joined today by my colleagues, James Baker, Senior Natural Resources and Agricultural Specialist at the ADB, who is with me here in Manila, and our colleagues in Bangkok, Vincent Aloysius, who is a Team Lead and Circular Economy Specialist with Soreca, and Pia Kerdlap, Founder and Managing Director for PXP Sustainability. Next slide, please. Together, the four of us co-authored an ADB brief titled Financing Plastic Circularity in Asia and the Pacific, How to Overcome Market and Policy Challenges and Create Impact, which was published last November 2024 and is now accessible on adb.org. Our session today will cover findings from this brief, and you will have an opportunity to ask our authors your questions. The brief is based on outcomes from ADB's work supporting plastic circularity, including our regional TA project on marine plastics. Next slide, please. This brief also summarizes insights from our ongoing engagement with our developing member countries, including at our regional capacity building workshop on accelerating investments for plastic circularity, which was held last June in Jakarta, Indonesia, and co-organized with the coordinating body on the seas of East Asia. All right, so next slide, please. So as we get into this topic, we want to understand first, why financing plastic circularity is important. And this starts with the massive scale of the plastic pollution problem. According to the OECD, global plastic waste has actually doubled between 2000 and 2019, and it is now leaking into rivers, lakes, and the ocean. Under a business as usual scenario, the volume of mismanaged waste is projected to increase to over 250 million metric tons annually by 2040. And at the center of all of this is Asia and the Pacific, which is a global hotspot for plastic pollution. And where it is also home to 8 out of the 10 rivers, transporting up to 95% of plastics into the ocean. The issue is complex, but generally this mismanagement of waste in the region is caused mainly by unsustainable production and consumption patterns, as well as poor or insufficient waste management systems and infrastructure. So to address this massive problem, we need massive amounts of funding. A recent UNEP-FI study reports that up to $1.64 trillion is needed by 2040 to finance the required system change to curb plastic pollution. This will need a range of complementary and simultaneous intervention across the value chain, everything from changing how we design our projects, finding alternative materials, investing in waste management and recycling infrastructure, and scaling up circular business models, among many interventions. Yet, despite this very urgent need for our region, Asia and the Pacific accounts for only 8% of plastic circularity investments, compared to nearly 90% in North America and Europe. So to better understand this, we now need to understand what are the different factors that contribute to this gap and how we can create a better enabling environment for mobilizing finance. Next slide, please. So just to get a sense of what is contributing to this access gap, let's look at a number of policy and market factors that are hindering access to financing. So, let's look at different stakeholders. So first, with government, the complexity of the plastic value chain means that different ministries and agencies are involved in the circular plastics economy. And with so many different players and actors, this actually makes it challenging to coordinate and harmonize policies and regulations. So, one ministry could be handling waste management, another one could be handling, standards and eco labels, another one could be looking at, investments in small businesses. So these different groups need to be in coordination to be able to, enforce policies and to design policies that, better enable financing to come in. And for those policies and regulations that are in place, another major challenge is consistent enforcement, as well as adequate monitoring and evaluation efforts to ensure that policies are implemented effectively. This policy and regulatory environment makes it challenging for businesses, including small and medium enterprises, to gain support for financing. SMEs account for over 96% of all Asian businesses, and they play a critical role in plastic waste management and recycling. And they're often, especially startups and other small businesses, are at the forefront of developing new circular business models and technologies. But because there is low awareness and little information that is getting out and reaching investors and funders, there's also this higher perceived risk for new products and for smaller scale operations that are being run by SMEs. That makes it more challenging for SMEs to access financing. Next slide, please. And then finally, let's not forget the people that are central to the circular plastics economy. The informal sector is pivotal to plastic waste management and recycling, especially here in Asia and the Pacific. Yet their informal status makes it challenging to access finance for growing their operations or gaining consistent livelihoods. Limited formal employment or financial history, limited financial literacy, and discrimination make it challenging to access financial products and services. And then services that are available may come from smaller informal lending sources and may come with higher transaction costs and jacked up interest rates. Likewise, women play an important role in household and community level waste management efforts. In Asia, women actually make up the majority of the informal waste sector. However, women waste workers report lower earnings and are at higher risk of gender-based violence. And one report says that only 14.5% of global venture capital went to women-led startups. As a result of these cultural norms and gender biases against women, many women waste workers and entrepreneurs also struggle with limited access to financial products and services. According to one World Bank report, around 730 million women do not have bank accounts, which makes up around 54% of all people who are unbanked or do not have a bank account. In addition, many women also lack access to property and assets that they can use as collateral, which affects their ability to secure loans. So as you can see, there's actually a number of factors that are contributing to this issue of access to financing, and it impacts our progress to transitioning to a circular economy. So as we think about solutions for scaling up the amount of financing that we need to address plastic pollution, we need to consider a range of policy and market solutions for multiple stakeholders to unlock financing needed to address a plastic pollution problem. So now, to begin our discussion of different financing options, I will now hand it over to my colleague, James. James, over to you.
Great. Thank you, Erin. Thank you for that detailed introduction. So as Erin mentioned, one of the challenges we have is the complexity. Next slide, please, Ice. The complexity of the circular economy. There are so many moving parts, whether it be government, whether it be private sector, whether it be social, whether it be environment. Just that sheer complexity is matched by the range of sources of financing. And one of the challenges that we see, across this entire circular economy, across this entire plastics value chain, is the tailoring of the projects, the tailoring of the presentations, so that it matches the source of funds. Obviously, if you're approaching government ministries or public agencies, then what you're asking for and how you're approaching them is very different than if you're going to individuals or family offices or venture capital. And likewise, as you look at the receivers and the implementers, central government are going to be approaching different groups in different ways with different outcomes. And certainly one of the roles that this report has had and the team has had over the last few years is trying to understand the best or the optimal routes for funding different aspects of the circular economy, whether it be informal sector, whether it be government policy. And ultimately, we talk about the extended producer responsibility is a foundational form of financing. Essentially, it penalizes bad behavior and uses the revenue from that penalization to fund good behavior. So we start to look at private financing, at public financing, and this phrase that you sometimes see of blended finance. How do we use different sources of money, different sources of grants to achieve what we want to achieve? So it might be that for a specific project, we look at grant funding to get started, perhaps from the Global Environment Facility. We look at a government-backed loan or a multilateral development-backed loan as the initial money in. But after that, you can come in with private sector money. Certainly at the larger end of the scale, that's how it happens. As you get down to the smaller end of the scale, into informal sectors, then that reverses, where you see that the first moving money is typically philanthropic, it's typically private sector, it's impact investors that reach a scale, as we saw with the Alba Tridi deal that ADB did in Indonesia, that those smaller groups reach a scale where they become investable by multilateral development banks or by these larger sources of funds. And obviously, each source of fund has its own costs, its own challenges. Venture capital money can be very expensive. If it's something that is of interest to them, it can be quite cheap. Working with governments, with multilateral banks, the level of due diligence, the amount of information, the amount of knowledge and risk management you have obviously has to be much higher. So as we think about this sources of financing, how do we overcome? We need to understand that it is not a one solution fits all. It is very much a tailored, well thought out approach, not just for the initial steps, but through the entire life cycle of the project and off into the future. Next slide, please, Ice. So we start to look at ADB's role in this, and as I mentioned, we had the Indorama loan, which was a corporate loan, very different to the Alba Tridi Oasis deal, which was a project-based loan. And again, as a lender in this one, we benefited from first movement by philanthropic groups, by early stage investors like Circulate Capital, who took that higher risk, took that early stage investment, but built it to a scale whereby ADB could come in and with Alba invest in that project. But it also shows how the investors, the sources of money, have to be flexible. With the Alba deal, the supply chain for that was all informal sector. There was no overall covering supply contract, something that typically for a lender would be a huge red flag, a great risk. But by looking at the situation, looking at what we were trying to achieve, ADB has managed to be flexible, managed to take an approach that allowed that to happen. So there is onus on both sides of that transaction, both sides of that financing activity, to try and think about solutions. If we all stay in a very standard, very traditional position, we won't solve this problem. And we start to see policy-based loans in Indonesia, thematic bonds, plastic credits as we move into that space as well. They're all different ways of transferring funds, of managing that risk and getting the funding in at the right price, at the right cost, and in an appropriate way so that it supports the business, it supports the development, it doesn't hinder it, it doesn't slow it down, it doesn't cause it more problems than it needs. And certainly as we look as ADB at that sort of upstream work into policy advisory support, capacity building amongst government teams to generate that supportive environment, to generate that enabling ecosystem that allows these projects to function, to get traction, but also to have that runway in front of them. It's very important as we deal with governments where they typically have fairly short contracts. Contract length is linked to the electoral cycle. That can be very, very difficult for projects of any size to deal with in terms of that comfort, that comfort of supply security moving into the future, that comfort of tenure, of lease, of rent, of access, that could all, in that environment disappear fairly quickly. And again, as we start to work, well, as we've been working with governments, we're seeing this understanding that they need to provide that greater security. So very interesting opportunities. At this point, I'll hand back to Erin as our moderator. Thank you very much.
Thanks, James. So I'll turn it over now to our next presenter. Vincent, over to you.
Thank you, Erin. Could we have the next slide, please? Well, good afternoon and greetings to everyone once again. It's a pleasure to be able to join you in this webinar today. We are really happy that we were able to publish this this knowledge brief and to be able to take you a little bit more into the details and perhaps answer some queries at the end of the presentation. But let me just start with this question of how do we make investments in plastic circularity more attractive? Now, in the knowledge brief that we published, we looked into how the investment landscape in our region can be improved. Now, what are the challenges and the risks? The challenges and the risks are numerous. It includes consumer awareness and behaviors towards consumption of plastics. It involves perceptions on virgin versus recycled plastics. Security of supply, fluctuating prices, competition on costs. These are common complaints we hear from those in the recycling business. The cost of new business models, they need to be lower than traditional models. And this includes concerns on logistics, scalability, safety, as well as security. Now, these challenges, they cannot be overcome by private sector actors on their own. And there isn't especially if there isn't a level playing field and an absence of regulatory and market incentives. Now, in a voluntary environment, the level of investment risk will remain high. And this is the situation that we face in most countries in our region. Next slide, please. Now, there are challenges facing policymakers in implementing the EPR laws, which are at an early stage in countries like the Philippines and Vietnam. It would be even more challenging where producer responsibility efforts remain as voluntary initiatives. A regulatory landscape that is supportive and provides for a level playing field is important. For example, even within the recycling sector, there are challenges to overcome. You will find operators with non-compliant and polluting processes, and those who operate using clean and fit-for-purpose technologies. Now, the cost of operations between these types of businesses would be incomparable, but it would still mean that they would be competing for the same input plastic material. So this in itself also poses a risk, which is a supply chain risk. So achieving a harmonized set of policies, bringing various ministries and agencies together to achieve the overall goal is important. This is because if we observe in most countries, you'd notice that between the upstream manufacturing activities and the downstream end-of-pipe waste management activities, the responsibility over the plastic value chain is held by various ministries and agencies. And this challenge cannot be underestimated. Next slide, please. Now, in this slide, we can see, the various actors and the types of innovations in the along the length of the circular value chain. From technical solutions upstream in the value chain, new business models, improved collection and better recyclability. The likelihood to attract investments depend on a number of factors where regulatory and economic instruments can help address. Downstream, for example, for creating demand, to create demand for products from recycled plastics. This could come in the form of green procurement policies that can be implemented, both at a national level or even at a city level. So green procurement policies could be applied for durable products made from difficult to recycle, even mixed plastics. And this would be something which would be harder to create a demand from the consumers without specific green procurement policies. On the other hand, upstream in the value chain, targeted economic instruments can help de-risk investments to improve recyclability of products when it comes to the end of the life cycle. Tax on virgin plastics and imposing minimum content limits on recycled materials could bring about such investments. For difficult to recycle plastics, the solutions for collection of legacy waste. Now here, plastic credits related models, including digital solutions or applying digital solutions, can help divert waste from landfills and prevent leakages. Such solutions also help engage with the informal sector, provide better income, and in most cases, traceability, which is an area of concern for big brands who want to, get involved in plastic credits. Then going on to, in looking for ways to encourage behavior change and creating more consumer demand, both for, changes that should happen upstream in the value chain and also the way we use and generate waste. These sort of shifts that will encourage circular solutions would need a lot of effort and cost as well as time. And revenues from taxes and levies collected throughout the through economic instruments can be channeled towards these efforts to make a shift in and support a behavior change, raise awareness, and thereby create a shift in consumer demand. Next slide, please. Now, as part of this ADB's technical assistance project in Thailand, an assessment was conducted on a number of economic instruments to be applied on packaging, plastic packaging. And this was conducted for the Thai Pollution Control Department. Now here we can see that this assessment was to figure out what sort of expected results we can obtain if we applied this selected economic instruments targeted to different parts of the value chain. And these instruments, they are designed to incentivize and help de-risk investments into innovations and businesses that can enable circularity. So for policymakers, conducting such assessments are very useful as it allows for informed decision making, and the impact can be quite a bit more targeted than a very wide impact instrument. So, and then also in doing an assessment such as this, will help reveal potential hurdles, and including, when legal reviews would be required. As I mentioned earlier, along the value chain, many different ministries, many different agencies are responsible. And when it comes to even using revenue or levies from different part of the value chain into areas including raising of awareness of behavior change, there might be some legal reviews or new legal frameworks that may be required. So the message here is, there's the regulatory aspect, a level playing field, and also more targeted economic instruments that can be applied on the needs based on the priorities of the National Action Plan for Plastics. And these instruments can help de-risk investments in plastic circularity. I will conclude my part here, and I'll pass it on to my colleague, Pia Kirtlap. Over to you.
Thank you, Vincent. So as one of the co-authors, I'm happy to now talk about where the areas for actions and needs. So we heard about the challenges, the landscape of the problem, but where do we go next? Okay, so what can government agencies do? So government agencies can implement a mix of economic instruments. So as Vincent just explained, different instruments tackle different challenges in the plastic value chain. And so government can look at all the variety of instruments available and see which one is best to implement based on their current national condition and what's the capacity and interest of the government in itself. Okay? Another thing that government can do is create incentives for recycled plastics consumption. So governments could mandate a certain amount of content in certain packaging materials or products to be recycled plastic, and that would drive demand for recycling of plastics. You'd also have a mandate of reuse refill options for consumers. So we see this already happening in Europe, where there is legislation that requires restaurants provide certain services within their food and beverage operations to be reuse refillable solutions. Now, in the context of the Asia Pacific region, implementing such a policy would need to be carefully done based on what are the financial capacities of each of the restaurants or food and beverage services to implement such solutions. Next slide, please. Now, what can project and developers and solution providers do, and what do they need? So there is a need to increase awareness about the range of financing options. A lot of these businesses are small, medium enterprises, and they may not make it to the traditional commercial loans that are available, but there are a variety of options, different types of bonds, different types of loans that could be taken that are catered to different needs and sizes of projects. What these project developers also could benefit from is providing tax incentives for plastic circularity businesses. So, for example, in Thailand, the Board of Investment already offers corporate income tax exemption for certain plastic recycling projects. And the last thing is that there is a need to improve law enforcement for good environmental and social practices. So Vincent talked about this a bit, how the playing field is not level at the moment, and companies can get away with poor environmental practices, whereas the ones who are doing well, they do require additional costs. And so we should create a better standard and enforce that so that the project developers who are doing the right thing can compete and stay in the market. Next slide, please. Now, how about investors and donors? We can have more blended finance packages. So we've heard from James earlier about the wide variety of sources of financing available, and each of them has different conditions, and they can come from public or private sources. And these different types of sources can step in at the different stages of development of different types of plastic circularity projects. So this is where blended financing could be really useful. More needs to be invested on the upstream side of plastic recycling. There's research produced by the Circulate Initiative that shows an overwhelming majority of investments have gone towards the downstream side. So that's waste collection, sorting, and recycling. But we need more investment on the upstream side, such as plastic reduction or reuse refill solutions. And finally, the donors and investors could provide capacity building for preparing investable projects. There are lots and lots of projects that are happening in Southeast Asia and across Asia Pacific region. But many of these projects may not be considered investable based on the type of financing they are trying to apply for. So there's a need for capacity building in this aspect. Next slide, please. All right. Now, if you look across governments, project developers, and donors and investors, there are other cross-cutting issues that need to be addressed. And one major one is gender equality. So there's definitely a need for more gender goals to be incorporated into financing instruments for plastic circularity. From our work, both in the field and desk research, a lot of these type of projects are run by women, and they have access challenges accessing existing financial instruments. So designing more financing instruments and funding sources that cater to the needs of women to run their business is definitely needed. And an additional thing that could be done to design products and services that meet the needs of women. So that means developing banking services or even tools or equipment that cater to specific needs of women that they face down in the field. Next slide, please. And finally, another key cross-cutting issue that needs to be addressed is human rights. And this is more looking at the informal sector for waste management and plastic recycling. And so there needs to be inclusion of the informal sector in the policy-making process. And this could be done by public hearings or actually bringing in these informal workers or their representative to be a part of the idea process to develop policies that benefit them and they can use themselves. And finally, there's a need to support access and ownership of banking services. From our research and work in the field, we see that in some cases, certain people at economic levels, even women, are not even allowed to own a bank account. So how we need to take more action on increasing access of financial services so that they can run their businesses independently and efficiently to meet the goals of plastic circularity. Okay. So these are just the key needs and areas for action. I encourage all our participants here to download the briefing to read more in detail about what these all mean and even some of the challenges in trying to actually implement these areas for action. I'll pass it back over to our moderator and speaker, Erin Zinapa.
Thanks, Pia, Vincent, and James. So, while the challenge ahead of us is quite daunting, there are, solutions available. At the same time, there are a lot of, actions that need to be taken across different parts of the value chain from multiple stakers in order to make this successful. So again, here is our policy brief. We encourage all of you to go to the ADB webpage and download it and learn more about what these solutions are about. So before we get into the Q&A, I just wanted to ask a couple of follow-up questions to our other speakers. So maybe to Vincent, you mentioned earlier, this major challenge that we see, which is about addressing risk in plastic circularity investments. What are the typical risks in plastic circularity projects, and what measures can be undertaken to de-risk projects?
Okay, thanks, Erin. This is a short question that needs a very longish answer, but I think it'll also help us to get into further Q&A in this session. But let me just look at the types of risk, right? We can start with the very basic, and you have a market risk, whether or not, products from, first of all, input materials, is that available? And when you develop a product or you produce a product, is there a demand for it? So that's market risk involved. And, when you're competing with virgin versus, recycled materials in products, there's various risks or competition involved, because of perception and various other factors. But so market risk is one of the big ones. And then you have technology and operational risks as well, in terms of, the cost of operations and technology that you use. Are they best available technologies? Are they not polluting? Or in terms of costs, how do you compete, right? So again, I give the example of, different businesses, taking different approach. One could be more polluting, but do we accept that, and do we do we put them in the same basket? So then, we go to regulatory and policy risk, so if there are regulations, but they're not enforced, that's also a risk. But if there's no regulations or policies that are purpose-built to address extended producer responsibility, then there's very little risk of, very little chance or likelihood that businesses would want to invest, because there's a high risk of others not playing according to the same rules. And then financial risk, James spoke quite a bit about the financial risk. There's a lot of compliance issues that are related. And if we look at blended financing or sources of finance that can help to address the ESG compliance part, then smaller businesses that might not be able, or newcomers who might not be able to fulfill the kind of high compliance level without this sort of support, might not make it, unless they pay a very high premium for the loan or whatever instrument they're looking for, right? In order to obtain the cash for the investments. So supply chain risk, that's another another factor. And one of the complaints that you hear quite regularly is also there is a challenge to actually obtain input material for recycling businesses. And that, I think we need to look at this also from the point of view of, should we make it, should we mandate that, local businesses or businesses for supply of plastics or recycled materials, they should be fulfilling the demand for local needs and domestic needs, rather than taking that away and exporting it to countries where they are able to reach higher recycling rates, for example, and close their own gaps. But in other countries where there is such a challenge on supply chain risk, then you have an additional challenge on new investments. And finally, I would look at reputational and social risk. Take for example, trying to address, say, low value plastics, and you're doing that through plastic credits, and without traceability, with the risk of perhaps even using child labor in this sort of activities. So there's an inherent reputational and social risk involved, and not being able to address this sort of risk would mean that there'll be less players involved, or less takers for plastic credits, less money, and then thereby the whole this whole business would be less attractive. But I also mentioned earlier that some digital solutions are addressing some of these issues. I think I've spoken enough. I'll let my colleagues also chime in here.
No, thanks, Vincent. I mean, that's a really good holistic answer. So it's not just about, the technology or the kind of, the design of the project, but you actually have so many different elements to take into consideration to make this a viable investment. And in fact, that's actually a good segue for the follow-up question that I had for James. So James mentioned earlier about the Alba Blue Loan for Recycling, which was a recent investment with, coming from ADB for a recycling facility in Indonesia. And the project actually took some very interesting approaches to de-risk, some of those factors that you mentioned, Vincent. So maybe, James, could you share a little bit more about your experience with designing, and kind of putting together that project?
Yeah, so as I mentioned earlier, the supply chain for that project was from the informal sector. So there was no government-based contract for the supply. We had a female entrepreneur, Diane, in Indonesia, who had mobilized, organized the informal sector. And I always remember Siddhartha from Kabadiwala saying, informal does not mean unorganized. But she had created an ecosystem where through the volume, through the diversity of the collectors, they could maintain a tonnage. The challenge we had was how to prove that out in an environment where they were having to go from sort of 500 tons a month up to 3,000 tons a month. So for those of you who are familiar with project finance and particularly construction project finance and the project S-curve, where you have this sort of gradual increase in the amount of money out of the door as the project reaches its sort of peak of construction, then that flow slows down towards the end. So what we ultimately did was, as part of that loan deal, is put in place a parallel S-curve for supply, so that the company had to be able to show they could ramp up the supply through the informal sector in lockstep with the disbursement of the funds. And obviously, if they fell behind, then the progress of the build would be slowed until the point that they could either catch up, or if they couldn't catch up, then we would have to look at it again. But ultimately, taking those sort of established ideas, using them in different ways, fulfilled our needs for comfort, our understanding of the risk, but also allowed the company to progressively ramp up that tonnage to the point that we were comfortable they could supply the final the final plant, and it also gave them that sort of trading knowledge. So it's something we've seen in other industries, where you begin to trade the tonnage to get up to the critical mass, so as your plant comes online, you're immediately got that supply available. So yeah, some very interesting approaches. But again, we couldn't have got to that point if it wasn't for that early stage cash, that early stage entrepreneurship. So it is very much a progression. It's a team effort, across financing groups, and even across financing scales. To go from 100,000 to a couple of million to 44 million, it takes a lot of different financing institutions, a lot of different approaches.
Thanks so much, James. And it's good to see, kind of a real life example of, how a project can be designed and prepared so that it addresses those risks. And it also, has a solution for including the informal sector and giving them, kind of an opportunity to, be a part of not just this project, but also to give livelihood opportunities, to, address some of these other issues that we brought up earlier about the sort of the needs and the gaps as well. So thanks for that, James. So now I want to open this up for Q&A. And, to kick things off, we have some friends and colleagues who are ready to share some comments with us. So first, I want to invite Guylaine Devallon to come in. So Guylaine is our colleague here at ADB. He's Senior Infrastructure Finance Specialist. And, he has some things to share with us about policy-based loans.
Yes, I have something to share about policy-based loan. What is a policy-based loan in the first place? Maybe in a few seconds to explain what this modality is. Multilateral Development Bank and other bilateral development finance institutions use this modality as a complementary modality to investment projects. This is a general budget support to sovereign government, which is twofold. It supports a set of reforms, but it also addresses financing needs of the government. It's programmatic. The way we design it in ADB, it's programmatic approach spanning over 4 or 5 years, usually into a series of 2 or 3 what we call sub-programs. So we have time to design a trajectory which is supposed to be ambitious in terms of policy actions, because what we are talking about is the embedded policy actions. The policy-based loan is addressing regulatory framework. So it's a modality that allows for the government to pace their regulatory issuance, so regulation guidelines, decrease at different level, so that the enabling environment could be framed. Enabling environment for what? For all the life cycle of plastics. From the speakers spoke very brilliantly about the challenges. Here we try with the PBL, policy-based loan, to address upstream and downstream. And the beauty of this instrument is that since you are talking to different ministries or agencies, you have the possibility to, with a set of or a battery of different actions, address the full life cycle of plastics. Yeah, from the upstream part, you look at the production, the avoidance of plastic in the production of packaging, for example, to the midstream and downstream waste management and the whole life cycle. This modality comes also with some other complementary financing, other modalities like technical assistance. It has to come with technical assistance because it's being borrowed by a central government, usually Ministry of Finance, but the responsibility of implementing the policy actions is laying on what we call implementing agencies, which are line ministries, technical ministries. What do they get? They get technical assistance to reach the targets that, together with the government, we are assigning them to. So technical assistance, that could be policy action by policy action, or capacity building on the margin of what is expected to be done. Also, the beauty of this instrument is that usually it's a coalition of what we call development partners. So ADB not alone, like in Indonesia and the Philippines. The reason why you asked me maybe to give a testimony of this. We do that with bilateral development partners, KfW and AFD. And together we do have a spectrum of technical assistance ranging from expertise to study tour to lessons learned on some other areas, or benchmarking that could be of use for the member country we are working with. And just coming back to one of the expression that one of your speakers used, this is a very sheer complexity when it comes to plastic life cycle, entailing a lot of ministries, agencies, and different bodies. So it takes this kind of framework instrument, if you want, to address this kind of complexities on a lot of time. Obviously, it has to be complemented by other investment projects, financing, some technical assistance, and some pilot projects that I think the speaker spoke before. Let me stop here, Erin, and get back to you.
Thank you so much, Guilain, for sharing your insights. And it's interesting to learn more about the how policy-based loans are designed and the impacts that we can expect from those. And this looks like something that we're going to continue seeing as we ramp up our investments in plastic circularity. So thanks so much for sharing your experience, Guilain. Next, I want to call in Jeline Liu, who is with the Circulate Initiative. And we just wanted to hear your thoughts on, just transition for waste pickers, and what is the link between that and responsible sourcing and financing, and how are they connected to one another?
Thank you for the question, and thanks for having me here. It's great to be able to contribute to this discussion, and I'm happy to share the Circulate Initiative's perspectives on this. So these topics, they are critical interlinked areas that we have explored in great depth through our work. So through our Responsible Sourcing Initiative, our multi-year global program, we focus on uplifting informal waste workers and delivering responsibly sourced plastics. And on financing, we've been tracking private investments in plastic circularity through our Plastic Circularity Investment Tracker. So just to address the question, first we look at responsible sourcing. At its core, this means that all participants in the recycled plastics value chain respect human rights and take action to uphold these rights for all workers. So a just transition goes beyond this. It means recognizing and integrating the most vulnerable group, the informal waste sector workers, into the supply chain and designing a fair and inclusive system based on their needs and expertise. So some key drivers of a just transition thing we've mentioned includes regulatory pushes such as the CSDDD and also reputational risk concerns, which was also previously brought up by Vincent. So with these, companies will be required to comply with and report on their human rights impacts, and the demand for post-consumer recycled plastics is also expected to increase. So for investors and businesses to meet these expectations, they must have the capacity and also the financial resources to implement responsible sourcing practices along their value chain. This will enable them to purchase responsibly sourced recycled plastics, reducing reputational risks and also ensuring that there's regulatory compliance. So to address a just transition, we look at activities like capacity building, technology transfer, and formalization efforts. So across our projects, we engage local stakeholders in capacity building and integrating informal waste sector workers into the supply chain. One example is in Jakarta, we support the organization of informal waste sector workers and also the setting up of waste banks run by them. So to tie this into with the whole financing topic, these efforts require significant financial investments and also an understanding of the cost drivers of these responsibly sourced plastics. This is something that we are currently a piece of research that we're conducting based on our implementation projects. So costs include initial and transitional costs like capacity building, tools for transparency and traceability, and also other recurring costs. So by aligning financial mechanisms with responsible sourcing commitments, these are just some ways to drive a just transition. So just to wrap up, while responsible sourcing sets the ethical standards, financing provides the practical means to implement these standards. Without it, a just transition remains an aspiration rather than a reality. Yeah, thank you.
Thanks so much, Jolene, for that perspective. And, the just transition is going to be, a really big, element and topic as we get into these wider discussions around, implementing an internationally legally binding instrument for addressing plastic pollution and making sure that we're designing, inclusive as well as, effective investments in plastic circularity. So thank you for sharing your insights. And now that we're talking a little bit more about just transition and the plastics treaty, we want to bring in our colleague, Rocky Guzman, who has been working with us a lot on the Global Plastics Treaty. He is our international governance policy and legal specialist consultant on the project. Rocky, over to you.
Yes, thanks, Erin. Of course, for financing the plastics treaty is really linked to its capacity to support the means of implementation. That is technology transfer and technical assistance for the fulfillment of treaty goals, such as waste management infrastructure. Now, as it is right now, the draft treaty text presents significant opportunities depending on the outcomes of negotiations, of course. But what's evident, Erin, is that the private sector mobilization is important as public sources of funding is really not enough. Now, in a best case scenario for the plastics treaty, there would be strong multilateral cooperation supporting the treaty with a financial mechanism established as a multilateral fund to aggregate resources. In this scenario, countries commit to clear goals and mandates, integrating both public and private funding resources. Now, a few things under discussion are innovative financing instruments that could help mobilize the financing needed. This includes EPR, which are currently being discussed as a control measure and as a financing mechanism from industry, but also being discussed are mechanisms such as plastic pollution fees to generate revenue streams and outcomes-based financing, which ties investments to measurable outcomes. Now, these may not be in the treaty text itself, but through enabling conditions set out, countries can better explore these financing mechanisms in the future. Now, on the other hand, on a worst-case scenario, the lack of consensus among countries into the finance landscape could further the fragmentation of the finance landscape and lead to inconsistent and inadequate funding. In particular, relying solely on voluntary contributions with the wording parties with the capacity to do so should contribute, and no binding obligations could create unpredictable financial flows and undermine the effectiveness of this anticipated treaty. So overall, the financing and the treaty must be sufficient, predictable, and accessible for the success of this internationally legally binding instrument, and that ensuring mobilization towards developing countries where the needs are greatest is key to ensure alignment with the treaty commitments. So thanks, Erin.
Thanks so much, Rocky, for sharing your insights. This is going to be, an important topic in the leading months as we, get into the next or the extended negotiation for the Global Plastics Treaty. So thank you for sharing that. And, we, as we keep mentioning over and over, this does require action from different stakeholders across the value chain. So we want to bring in our last, commenter, Bunga, who is from the National Plastic Action Partnership in Indonesia. And she will share a little bit about how the partnership, or the NPAP, has been helping to mobilize finance so that countries can meet their plastic pollution reduction targets.
Thank you, Erin. So hi, everyone. So Indonesia NPAP is a multi-sectoral platform. We are part of the Global Plastic Action Partnership as well. So we are here in Indonesia to support the government target in achieving 100% plastic circularity by 2040. So according to Indonesia NPAP Financing Task Force Roadmap, which was led by the ADB and also the Fiscal Policy Agency as well. So we need estimately 18 billion US dollar to achieve that goal in 2040, and also with additional 1 billion US dollar per year from 2017 until 2040 for the operational costs. And also, in contrary, our national and also state budget is very limited for waste collection and also management. So for instance, our subnational budget on average is only count for 0.6% for waste management and also collection. So there is a huge gap where the funding from the non-state actors or from the non-government will need to be covered, that funding gap. So this is where the NPAP can play a role. So for instance, in 2022 back then, we facilitated the pledging and also commitment given by non-state actors, including by the ADB back then for the policy baselines. So these commitments and also pledge will be given to the governments in order to support the government target in reducing plastic pollution by 2025 and also the end of goal 2040. So and also to give you the smaller examples, as the platform, we also help in mobilizing resources, including funding from development partners, from funding institutions, from the private sectors, to the SMEs who work on the plastic pollution management and also collections, because it's really hard for them to access the finance, whether it's grant or loan for the SMEs in here. So we are also mobilizing we are helping the mobilizing the finance from the development partners, private sectors, and also financial institutions to the SMEs as well. And also, as the collaboration platform or multi-sectoral platform, we are helping the government to communicate with other stakeholders, and also including with the financing institutions, because it is really crucial when designing the program for financing or funding that this funder really need to talk with the government to understand their priorities, their strategies to reduce the plastic pollutions in order to develop well implemented and also effective programs and also funding. So yeah, basically Indonesia NPAP is a neutral platform where all the stakeholders can work together, can connect each other so they can collaborate and also can gain information and access. Thank you, Erin, over to you.
Thanks so much, Bunga. And it's great to hear, kind of real on the ground example of how different stakeholders are coming together to, collaborate and meet these marine debris reduction goals. And thank you also for mentioning the financing roadmap that was developed by NPAP Indonesia that shows real commitment to working towards that. Okay, so we have a few minutes left. I want to address the question that we received here in the chat from Terry. And so I'll bring it over to you, Pia. If there's no mandatory blending into new products, how can recycled plastics compete with fossil fuel-based plastic products?
Sure, happy to take this question, Terry and Erin. So the obvious answer, it's very hard to compete if the oil prices are very low. And this is also an issue for any other type of alternative material. But if, one way to still have some demand for recycled plastic is we see companies where they have these greenhouse gas emission reduction targets. And so companies, when they're buying their packaging, they will mandate a certain amount of packaging material to be recycled PET, for example, right? And so that drives demand for recycled plastic. Obviously, this alone is not the only thing that can address that issue, but there is still hope out there for ways to still promote mandates for recycled content, even though it's not mandated by a government agency, but more of a private sector-led initiative in order to meet certain environmental targets or even other sustainability goals.
Thanks so much, Pia. And thank you also for your question, Terry. So I'm afraid we've run out of time for today's webinar, but I want to thank all of you for taking the time to join us today. I want to thank my fellow speakers and brief co-authors for coming together and putting together this great session for you today, as well as everybody who contributed their insights, including our colleagues from different partners and working on different projects as well. Thank you all so much. Please do read the brief. We will share the link with you again. And when you exit the Zoom, please do take the time to answer the survey so that we can continue to create more tailored webinars for you around circular economy. So thank you all again, and we'll see you again at the next one. Bye, everyone.
Thank you.
And
Take care.
Bye.
bye.